The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 12th wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to dial on in 877-927-6648, internationally 727-445-1044 is the number. Of course, you can send me an email, steve@tfnn.com, and inside the Tiger's Den, any ping will do. Right now, we got the Dow trading down 67 points at 20,583. The S&P is off 9 at 2344. The Index 100 down 21 points. The NASDAQ 2,100 points. How about that? 21 points. The NASDAQ Composite off 29. The Russell's down 15, 1% to the downside. The semiconductors are off 16. I believe they're trading below yesterday's hammer candle low. So we'll go take a look at that. If you don't know, I'm having some technical difficulties displaying the charts like I normally do for you. So I'm going to post them in here one at a time, and then during the next break we'll see if there's anything that we can do to get that resolved out here. So there was a request that came in yesterday from Steve. He said it was another Steve or something along those lines. He wanted me to take a look at Schlumberger. So let me go ahead and get this chart here populated, so to speak. That means I'm going to turn on a couple of different tools. Now I'm going to go ahead and post it into the Tiger's Den. I think from here they'll be able to go ahead and post this on TigerTV. So, Steve, with regard to Schlumberger, we're taking a look at it today. Right now it's trading about 79.67. And here is what we know. Nice trading session yesterday. Volume behind that move was 6.7 million shares. So far today, about 3.6. Yesterday with volume, you busted through resistance. We take a look again, at our TAS daily profile levels here. So closing above 79.02 was a big key. This suggests that Schlumberger is on its way up to the 82.04 level. Now, as it gets into the 8204 level, Steve, what it's going to be doing is going to be testing really two different areas. March 1st, there's 6.7 million shares, so you'd like to see it coming into that area being anywhere from 80, 60 north of that, as well as testing the trading session from February 10th. That's got 6.2 million shares, so you'd like to see price coming into that level being 81.85. What you really want to see, so if it's coming in there with volume, says it continues heading northward, and you certainly want to see it close above 82.04. This has sold off during the day. I'm going to take a quick peek at oil, see what it's doing. Really not that big of a deal, just down 17 pennies right now. What you would prefer not to see occur inside of Schlumberger, now I got to pull the chart back up here. Your preference is not to see this close back below 79.02. So I hope that helps you out. I see another request in here that says the ES Mini. Take a look at the ES Mini out here, 2336, 2330 being key levels. And there's no question about that. I'm going to go ahead and move over to this chart here that's going to show each of us for the ES Mini. So I'm going to go ahead and post that now out here. And actually, it's pretty clear where you can go ahead and take a look at the data inside of the box. And in this case here, you're looking at a 60-minute. That's the left-hand panel. You're looking at a 240-minute. That is the we'll call the second panel, third panel from the left. Then you've got the daily and the weekly. And what Mr. Z is referring to with regard to these interesting levels, the weekly specifically has a market profile bottom of 23.36 and change out there. The actual low this week has been 23.33. Now, closing below that level, 23.36, would ordinarily send a change in trend message to you and I. That would be as of tomorrow. However, charts not refresh automatically. You must post manually. I did post manually. Is that check out the last one out here? Let me just see. Check out the last chart that I posted. If you grab that out of the den, then I think you will. I think you'll see the last chart out there for the ES Mini. Okay, just trying to multitask here, which for me is not an easy thing to do. Now, but back to what I was talking about. The 23.36 is important, but I would say just as important really is 23.30.50. The number says 23.30.65, but it's mathematically impossible to do that. So we're looking at 23.30.50. And quite frankly, if it was 2 ticks below that, big deal. You need to see it close below with conviction. Otherwise, we just really have this trading range, which really is between the 23.31 area and probably the 23.56 range out there. So, that's what I would be paying attention to. Let's go to Victor in Paramus, New Jersey. Victor, thanks for calling. Thanks for holding. How are you today?
I'm doing good. I'm looking at FCX. If it's going to close, there's a gap there around $11. And another thing, I think we went to war years ago. Bush went to war on Easter weekend. I forgot what year that was. I remember it was Easter, and he started shooting off some stuff. So I think we're in the same game plan, over this weekend, you know what I mean? Because there's some tension between North and South Korea or whatever. I think you know what I mean? It's the same game plan.
Sure. So let's do it. Let's take a look at things one at a time.
I'll put $100 on a war over the weekend.
Okay. And who's got the over/under on that deal? But let's take a look at Freeport McMoran. I'm going to go ahead and post this chart inside the Tiger's Den for you. Now, you're looking for this to come back and fill a gap at around the $10 area, or say $11?
Yeah, $10. It might as well close it, right?
Well, it may. What it did here recently. Let's take a look at the recent action on this. And for me, the recent.
Don't you always base it on the Aussie dollar or something? I heard you when you talk about that stock.
It is really important to take a look at FCX and line up the Australian dollar, because it's really like trading. What's that?
No, how's it looking? You going to line it up for me?
I will absolutely line it up for you. First, let me tell you what FCX has done in an area that I want you to pay attention to, and that is November the 8th. Because on November 8th, there was a wide gap there. So there was wide price spread and accelerated volume. By accelerated volume, I'm referring to 79 million shares. As price came back into this area on March the 27th, it came back with half the volume, 35 million shares. That is a test of a breakout area on lighter volume. It suggests that FCX is really trying to make its next move higher. But Victor, hold on through this break. I'm going to see if I can get the live charts. But regardless, we'll go take a look at the Australian dollar and FCX. Steve Rhodes from TFNN.
All right. Bye.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee.
See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We're on the line with Victor in New Jersey, and we are taking a look right now at the Australian dollar. And I'm going to go ahead and take this FCX and FCX as well, because he asked a really important question, which was, do we really need to focus on the Australian dollar while we're trading FCX out here? And, Victor dropped. Okay, all right. So that's okay. But we can still cover what it was that he was looking for. So, Victor, I was able to get my charts here so that we're posting everything live. You can see my entire screen out here, and it's not a perfect correlation. The Australian dollar is up at the top, but it is a good enough correlation, Victor, where I think that you want to at least pay attention to it. But that being said, my preference is really right now just to go back to the FCX chart and identify for you exactly what it was doing. As we went into that breakout there, what I was trying to show you was, again, this trading session on November 9th, where you had a breakaway, a wide break with volume out there. And all price did was it meandered back into that breakout area. Now, what you can see on my screen here are a set of market profiles. What FCX is doing right now, it's testing support, that being 12.99. It's trading at 12.97. If you're trying to trade this and it closes below 12.99, then it suggests that price will pull back anywhere from the 12.64 to even possibly where it had gapped down on March 27th. Lighter volume going against the breakout. So the range here would be 11.91 to 12.32 out there. So that would in essence be your buy or your go no go level, because if price were to close below 11.91 with more than 35 million shares, then I think the area that you're taking a look at maybe, or there is a gap out here on October 24, 2016 at the $10 area, then in essence price could be coming there. That could be an A to B equals CD to the downside. Now, you mentioned something about trying to put $100 on a war occurring this weekend. I can't tell you whether one will or won't. What I can share with you is if you're right here on that $100 bet, what you will see is you will see the market, the U.S. market, move lower. and continue to move lower in earnest until the belief is out there that that we're going to that the skirmish or whatever it is that the worst is over. That there is optimism. You could go back and study all kinds of wars. I've done it. So I can tell you that with regard to this pattern, when it comes to military actions, when it comes to major suicide bombings, terrorism type things, that the way that the market trades is that initial entry into that action out there sends the markets reeling until there is confidence, at least with regard to the way that people are feeling and the way that the communications are coming out there, that it's going to come to an end relatively soon, and that we're in charge here. It's kind of like what happened with regard to the old Tomahawk missile out there. Once the market understood that this was what appeared to be a one-off deal, it really didn't have any problems or issues. We saw the market trade lower. That's the initial reaction. It's so you can time it if you're sitting in front of the screen as something like that happens. You can immediately jump to the short side. You're looking for something longer term, but as soon as the message starts coming out that in this case here there was really just a one-off deal, you saw the market go ahead and recapture those gains, and it was back to normal trading. Now, normal trading, what does that mean out here? Well, I mentioned the semiconductors out here, the semiconductor index, down about 1 6/10%. So you certainly want to be watching this today because you know the expression. If you close below the low of a hammer candle, and that's what yesterday. Well, let's take a look at yesterday. Excuse me. Yesterday was really the formation of two candles out here, neither of which we knew which one was the real message of the markets. If you look at the move to the downside here, you can see that the semiconductors gap down at the open, right? You got a nice gap. The close or the low of the prior day was 989. The high of yesterday was 984. And you can see how the bulls fought back during the day, pushed price all the way back up near the open. It looks like a doji / hammer type candle that's out there. So it was a combination of a gap down, bearish. The formation of a hammer candle says you're trying to hammer out a bottom, and if you close below that level out here. Now, I don't really like gap down hammer candles, because if you fill in the void of price from the prior day's open and you were to draw the body of the candle, it will not qualify as a hammer. Unlike the S&P 500, right? If we go take a look at the S&P 500 out here, and so we just get the wider swath of the marketplace, you're going to see that yesterday was also a hammer candle. But there was no gap to the downside. So with regard to the direction of the market, what it wants to do, yesterday's low is a important level. And inside the S&P 500, we're talking about on a closing basis, 2337.25 out there. And since we're talking about the S&P 500, I did just a little test at noon. Let me go ahead and update that right now just to see where the SPY is trading at. So let's go ahead and call that up to the screen. And you'll see that I was targeting the swing point for March 27. And on March 27th out here, the volume was 87 million shares. Right now we're at 28. So let me go put the 28 million shares out here. We've been trading for nearly 3 hours, right? 9:30, 10:30, 11:30, 12, 4 hours. What the heck? What kind of math am I doing out there? But I've got my abacus, all 10 fingers out here, and I love to use that abacus just as a double check. So the SPY's doing right now, what do we say, 28 million or so. This is going to do 45 million shares out here. Yesterday was rejection of that swing point, 88 million compared to 87 million. So that was an even Steven kind of day. Even in the newsletter I wrote this morning that because of that test with similar volume, very likely we're going to see a test of that high again, 233.92. We're trading at 234.04. So now you're testing a swing point with light volume. If the SPYs, and if you're going to go ahead and use as your barometer as to what the markets are doing, the index ETFs, which quite frankly I hate doing. I just absolutely hate it these days. I don't think it's really a great thing. But it's not. But it's worthwhile to pay attention to And so, therefore, you and I are paying attention to it. If you close above 233.92 today, we already see it's going to be on light volume. That's unless Victor's right, and the $100 that he put down, all holy heck is going to break loose. A war breaks out. Then you're going to see volume move to the downside out there. I doubt that is what's going to happen. But how do I know what's going to happen at 126 on out here? I don't. But right now, let's speak about what we do know. And you're moving down with less energy than you had yesterday out here. Hello, Paul Revere is riding through the fields of these charts out here saying there ain't no way, folks, that the markets are ready to move lower. They have had every gosh darn opportunity to do so and have failed miserably. You want to see a miserable failure out here? Take a look at the Dow Diamonds. Yesterday, the swing point is going against 4.5 million shares. Tested with a hammer candle yesterday, 3.5 million shares. Today, you've done, is that right? Hello, I got a knock on my screen. It makes 894,000 shares. That's it? That's all that it's done? Are you kidding me? Really, folks. You know what kind of volume that says for the day? 1.4 million shares. You want to talk about a rejection on price and volume? Any close above 205.51 says onward and upward. Steve Rhodes with TFNN. Right.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So I used to have this chart. I spent many hours going back, and it was a Dow historical chart. So I was able to go back to all events from, I think it was 1886 forward, wars, things of that sort out there. And as soon as the Tomahawk missile deal was happening, I went to find that chart so that I could update it. And for the life of me, I cannot find that thing. I have searched and searched, and I'm like bummed, right? Because I have to know, because I like to, you know me, if I say something, I like to be able to back it up with a fact. You can disagree with the analysis out there, but I just like to back it up factually out here, and because it is like the coolest trading plan out there that allows you to be able to take advantage of what's going on, worldwide. For example, you go back and take a look at the chart out here. Just go specific to the day. You go back to December 7th, 1941. You go back and take a look at the Dow, see where it's trading at. I don't remember, 115, something like that. You'll see it. You can't pin me to the number there, but you will see that was a high. And you will see that was a high. Now, the bottom didn't come in. The bottom came in earlier than when the confidence factor inside the U.S. said, okay, things were now on the up and up. And that was the Battle of the Coral Sea. So the bottom came in prior to that. It came in, I don't remember exactly, sometime around, I don't know. I'm not going to guess out here. But I know that the Battle of the Coral Sea was in 1942, right? May 7th and 8th out there. And if you go take a look at your stock chart, you're going to see the market just, boom, moved higher from there until we saw the 1946 bear market that formed out here. But that was 4 years later. And again, you go back and you do all this. I remember when that Charlie Hebdo event was going on, because that was over. That was on a Friday after the market had closed, and I had a subscriber that was long to the gonads out there. Not on my call, but other money that was being managed by someone else. And I remember being out at a restaurant Sunday evening and making sure that I wanted to be back when the futures market had opened, because enough had taken place over the weekend and on Sunday night that in those type of instances, and the markets had just careened, the futures markets had just careened to the downside. And when I took the call from the client, he was certainly concerned because it was being traded by someone else. What do I do? What do I do? And I said, well, I can tell you that what I'm doing is I'm buying this move to the downside. Now, in that case there, I also had some chart patterns that I like to see when bottoms form. And I've shared many of those with you. And so there was a question in the den with regard to my take about the swing points being tested with light volume. Am I bullish right now? And I am preparing to be bullish. I'm looking for those other patterns that I like to see on these intraday charts form that are very reliable to then tell me, okay, it's worth the risk reward that is out there. They're not present right now, which is really bumming me out. So I'm looking for a big push to the downside. I want to see a big push to the downside out here. We just haven't had it. I am hoping that it's going to happen between now and tomorrow afternoon out there. And if it doesn't happen, then so be it. But the signs with regard to what the market wants to do, which is not bust out the lows, is so screaming loud that but I still want to see these patterns form, similar to that Charlie Hebdo. I think that thing was we got a seventh wave move. I don't recall what time frame. Prices moving lower, doing with less relative energy, and the market just screamed higher from there. So you can really take advantage if you don't get caught up into the emotionalism of the boob tube and the boobs that are mostly on that tube, and you know what I'm referring to there, and get caught up into their analysis. I was going to say miserable, but I didn't put those two back out there. And you stay focused on your screens and the patterns that are out there, you can really take advantage of that fear, of that false evidence appearing real out there. So not that I want to see any of those incidents take place. Hey, when they ask Miss America, what do you want to see or something like that, and she says world peace, hey, I second that motion out there, so Totally. But with regard to when these events take place out here from a trading perspective, what I don't want you to do as you see the futures moving lower is to jump to the conclusion that, and especially if you had a bearish outlook, that's it. This market is going to just simply cruise lower. An all-out war? Absolutely. And then you know what to be looking for from a bottom type of standpoint. Okay, so look, enough of that. But since it was brought up, and I have on my list of things to do over the holiday weekend to sit down and rebuild that gosh darn chart. Certainly search high and low just to make sure that I can't find it out there. Okay, enough of that. I don't see any emails. Of course, I haven't really checked during that whole blabber out there. But I'm sure somebody wants to take a look at gold, and the question is, hey, what is the GDX doing, and all those types of things. You know what? Let's go take a look at the GDX on, is it this chart here? Let's see, yeah. So let's take a, give me a moment here to update this chart. I want to get rid of one tool but add another to it. And so I'll have that done for you post-haste. What the heck's post-haste mean anyways? But I just had to say it. And so now we're going to take a look at this GDX chart just to give you a feel for what it's doing and the good, the bad, and the ugly. First, I don't know where the ugly is just yet. Here's what we know with regard to the GDX. Number one, back here on the trading day of April the 5th. At April the 5th, we see in the bottom portion of my chart, well, on the top portion, we see this little convergence of three lines out there. The bottom portion of my chart, you see the price oscillator right at the zero level. They both are one and the same. Just depends on how you want to look at it. When that occurs out there, what you typically will see is you will see a test of that price oscillator, that red line, price oscillator and change line out there. And what we had here 3 days ago was an absolute test of Stevie's red line. Now, a test and rejection of that, it's just simply flat out bullish. You can't call it, well, you can call it anything you want. I won't call it anything else but a confirming signal that now you have a rising price oscillator above zero and price is ready to move higher. That remains the pattern unless we were to see it close below 23.52, and then I'd have to really analyze it. But with regard to this chart, it did everything that it was supposed to do, because then yesterday you had to move higher inside of the GDX with volume. We take a look at the GDX and the volume and where price is likely headed to over the long haul. The volume yesterday was, what was it? It was 88 million shares. That's a beautiful thing. Taking out 53 million shares. However, it is going into a 112 million, a little downdraft area from the trading session of February 27th. But nonetheless, it's given you the confirming bullish signal out there. There is no other way. Well, you can interpret it, as I say, the way that you want to. I just gave you my interpretation. And 28-27, the one-to-one, uno to uno, A to B equals CD to the upside is its target. It's not 25.71, the swing point. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So if we take a look at the 10-minute charts here, we're seeing a bit of a bounce inside the market. We will focus on the ES Mini first here. And here's the 10-minute chart, right? So we're just simply going to utilize one of those great techniques that Tom Obi-Wan Kenobi has taught us. And that's taking a look at 10-minute chart. So that's what we're looking at. We're going to look at the swing point low that formed this morning. This was between 11:50 and 12 noon. Now, there were 40,000 contracts as price was pushing down there. About 20 minutes later, there was a brand new market profile that formed. If we take a look at that 10-minute profile, you tell me, is this a bullish structure, neutral structure, or bearish structure out here? Absolutely. It could not be more evident that it is a bullish structure. Why? The point of control closer to the bottom of the box. Price gets into that box at 12:10. Between 12:10 and 12:20. Price comes back to test support being the bottom of the box. It's coming back with 18,000 shares. This is at 12:50, between 12:50 and 1. So that's 18,000 shares testing 40,000 shares. Do you think that the bottom is going to be busted out when you have that percentage, 50% lighter sellers out there? The answer is no way. So the message here was the price level that was going to be explored was 23.38 and 23.44. Right now, price is moving up into the 23.44 level. If there's going to be a block in price out here, it's going to be at the bar from the open. So that's going to be between 23.43.50 and 23.47.75. There ain't no way we're going to see the volume that we saw at the open right out of the gate, so to speak, at 69,000 shares. Not that we couldn't, but it is not likely. But any move about 23.44 says 23.47 is in the cards. We'll just have to see if the ES Mini can get above this resistance zone. It would be a lot easier for it to do that if its brethren, the NQ, was doing the same. But it ain't. And so if we go take a look at the NQ and see what it was doing, totally different 10-minute market profile. No market profile, quite frankly, that was bullish or bearish. If anything, it was bearish because price was below the profile, which has held as resistance. So it's the ES Mini that's doing the heavy lifting here. It is not the NQ, not when we take a look at a 10-minute chart out here. By the way, from a schmolium standpoint, the swing point that was being tested had 4,700 contracts. Then it was 3,600 contracts. contracts at 1250, right? Then you saw 3,200 contracts just 10 minutes ago, out 1330, 130 out here. Light volume test. So it was telling you it's not going to try to bust out the lows. It can't now. What the NQ is going to do is try to get up to its market profile high. That's going to be at 53.89. At 53.89-ish, because the exact number is 53.86.75, that's where it could also run into a little turbulence. So get ready to buckle your seatbelts out there on this flight. It ain't no United Airlines. I am not going to kick you off. Was it really United that kicked them off, or was it the I haven't read much about it. I think it's been a big hullabaloo out there. But I thought that it was airport security. Was it not airport? I could be wrong. I just haven't read the story. The story kind of sickens me out there. I mean, haven't you ever been dragged off an airplane before? No, the answer is probably no. But with regard to, but I thought it was security. Somebody, I should probably read up on it versus talk about it. But in any event here, people asking for Oscar Munoz's head. I mean, come on, folks. Really, he wasn't the guy doing the dragging out there. In any event, okay. So there's the 10-minute out here, and I'd pay attention to it to try to gauge, what may occur from this stage here. What happens if, in fact, the ES, which is the lead dog out here, can't bust through the top of its box? Very likely into a zone here where there's some really heavy volume, then just look for it to go down and explore the bottom of the box again and watch the volume. If it's coming down with less than, let's see, what is the number out here? Less than the last time down, 18,000 shares. And then here's your trading range, 23.38 to 23.44. You have to make a determination whether or not that's a tradable range for you. If not, then just simply sit on your hands. All right, let's go take a look at what do we want to go take a look at out here? Hey, how about the Japanese yen, right? We talked about gold. We talked about the GDX really out here. Japanese yen, you can't expect gold to do too much right now. You see the Japanese yen here is basically flat on the day, up just slightly higher after yesterday's nice downdraft. The yen is going to go ahead, or should go ahead, and form its A to B equals CD pattern, get down to the 108.52 area, the 106.62 level. It just doesn't have to happen overnight. If we take a look at profile, see if anything new here has formed since yesterday, and the answer is no, it hasn't. So everything is looking good for the silver and golden metals out there, as well as the equities. But and you know what, the XAU, if I take a look at it, here's where we have kind of a little bit of ambivalence, right? So we took a look at the GDX. I shared with you a set of tools that is very reliable for helping to identify what the market is doing. So now we go take a look at the XAU, different than the GDX, because that's really the HUI, right? And we can see the convergence that took place yesterday. Both you and I can see that convergence. Now, was the same day, April 11th, really the test of Stevie's red line out there? It wasn't too bad, quite frankly, because price pulled back as the convergence was occurring, which was really the following day. So, the XAU is either going to pull back and test that red line out here. That red line is priced at 85.83 as we speak right now, but it really doesn't have to, because price was pulling back into the convergence, and then it was a trampoline effect out here. So it looks to me, and yes, we are in wave number 6. That was yesterday. If we don't make a new high inside the XAU, then you likely are going to get to wave number 7 over the coming days out here. Could even be tomorrow. All right, what do we want to go take a look at next out here in the next 2 minutes? Let's go look at, we did the ETFs, the index ETFs out here. I don't think you and I have really done the sectors within inside the S&P 500. So let's go take a look at what they are doing out here. We look at the XLF. I think it's still the number 1 sector. Oh, we've got a caller, Jim in Palm Harbor. So let's go to Jim in Palm Harbor. Jim, thanks for calling. Thanks for holding. How are you today?
Yeah.
Jim, you there?
Yeah, I'm doing good. How are you?
Excellent. Thanks so much for asking. And you want to take a look at the iShares semiconductor sector, correct?
Yeah, the SOX, SOXX.
Yeah. So tell me what you're looking for. What are you looking at? How are you looking to trade this? Are you already in it? Are you short? Are you long? Tell me what you're doing.
I'm not in it at all. I just would like to be in semiconductors, and I was looking for a good pullback to get in, and I'm not, the way the chart looks, I'm not sure where that would be.
So right now, so here's the problem with the semis was yesterday was a gap to the downside, also a hammer candle, but we're going to go with gap to the downside with 534,000 shares out there. And that was moving into the last time that price was down in that area was 523,000 shares on February 24th. So in essence, it's kind of coming back with not necessarily light volume. Today might be your light volume test. You're at 353 right now, but we're going to go to a break, Jim. Can you hold on through the break? We'll come back. We'll take a look at the stocks, and we'll give you some areas to consider for going long the semis. All righty?
Sure. Yeah.
Okay. Steve Rhodes with TFNN. We'll be right back, folks.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market-Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's that time of the year again, and that means the Spring Tiger Dollar Sale is back. TFNN has just announced that our best Tiger Dollar Sale of the year is back this week only. Right now, you can get up to a 50% bonus on whatever you spend on Tiger Dollars. Tiger Dollars can be used for any TFNN newsletter or service and are a great way to add extra savings to any TFNN product. Tiger Dollars never expire and are fully transferable. Whether you're a current subscriber or plan on purchasing anything in the future, this is a great time to get your Tiger Dollars. Remember, this sale ends Sunday and we're closed on Friday with the market, so don't delay. The Spring Tiger Dollar Sale with the potential to earn a 50% bonus on your purchase only comes around once a year, so don't let it pass you by. For all the details and to get your Tiger Dollars today, visit the front page of TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Hey, Jim, what's your time frame horizon on this trade or investment in the semis that you're trying to make?
It would be just midterm. Rhodes.
Midterm. Okay. So that's good to know. So then from that perspective, I want to go ahead and give you the analysis that way. And if you're watching us on Tiger TV, the screen that I have up right now, you'll see some green horizontal lines going across the screen, and those would be our weekly market profile. So that's really going to be our intermediate term type trading tools that you and I would use out here. And one of the things that we can notice is that from the trading session of July 12th, 2016, when price broke above a level of resistance that was the top of that box out there, we have never seen price close below the bottom of a weekly profile. Now, I have daily candles on my screen out here, and what we can see is that the bottom of the box is likely to be tested. It may have been, in essence, tested today, not to the tick, but pretty darn close to it. In other words, the bottom of the box is 130.07, and the low today is 130.47, so 40 cents is pretty darn close. Now, and we can even see that the structure of this box here is a bearish structure from the standpoint, meaning that price should test the bottom. So in essence, it's either done that or it's going to do that. That is a level that you want to watch, 130.07. I would want to, from a long standpoint, I'd like to see a signal with regard to the markets, the general markets, the NQ, the ES on a daily basis, or some other type of intraday chart out here gives a signal that that's it. It's time to move higher in the markets. Then you have, in essence, from an intermediate term standpoint, nothing more than a test of a level of support. If, on the other hand, price closes below 130.07, 127.43 will be the first area to get tested. That's the last time that this had any kind of sign of strength in it. Not really the last time, but a sign of strength that has been tested, and that was the gap, which was 675,000 shares created on January 25th. So that would be the second area for you to watch. But it closed below both of those levels. Then what I do here is I'm going to switch over to the weekly time frame chart. And then the weekly time frame chart, we just simply go to the candle session that had the biggest volume, the most recent biggest volume. And that takes you to November 7th out here. So let's say that the market decides that, you know what, it's not trying to find a bottom. It was a head fake, and it's really that top that we've seen from March 1st. It's ready to move lower. Then where this would trade down to would be the somewhere in that November 7th swing point, or it's not even a swing point, that November 7th session, which is anywhere from 108.10 to 113.47. Right now, the trend is still the friend. And until it closes below the low of a weekly box out here, you know, that's saying this could be the buy. I would just as like to see the general market give us those signals as well. And I don't know that it's done that just yet. I like to always have some conviction, you know, because, I mean, otherwise, why call? You know, you don't want. I mean, you got to see both sides of the coin, right, in making the trade out here. But those numbers are those pieces of information. What questions would you have you know, are in your mind that I can try to answer? Jim, are you there? Hello? Have I lost? Am I there? Am I live, guys? Am I live? Is this Memorex? Private, yes, okay. All right, so I'm live. Well, Jim, I guess is Jimmy there? Yep. Looks like we've lost him. And looks like it's the end of the show. My apologies. Hey, folks, thanks so much for being here. Stay tuned. Your favorite polar bear in mind, David White, is up next. Have a terrific Wednesday, wonderful Wednesday. We'll see you on terrific Thursday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.